All right, good morning, everyone. Happy Tuesday to you. It is the final trading day of June 30th, 2026, and this is the audio addition to the Daily Trade Strategy Briefing. NFA Compliance Rule 2-9C subparagraph 1. You're all familiar with risks associated with trading. No need to go over that in detail. All right, so it is the last trading day of the quarter, even. So we got some potential window dressing. But frankly, last Friday was, I believe it's still trade day plus two, if I'm not mistaken. I don't know if they've reduced it to trade day plus one yet. Um, Friday was essentially a big quarterly rebalance. At the end of the day, for those of you who are around, Libby posted actually an image up on the chat there. Thanks, Libby, whereby the market just went like absolutely bonkers right at the bell. All right. I don't trade Friday afternoons for the most part, anyways, let alone Friday rebalance, end of month. It's just nuts. There's no edge. There's no edge. So again, we gotta stay in our lane, as they say, right? Stay in your lane. Know what's what works, right? Over a large sample size, right? Doing something, end of quarter rebalance, end of day Friday. You just to me, it's like trading Fed days. It's even worse. At least in Fed days, you can get some directional movement, but something like that at the end of the day on Friday, end of quarter rebalance was just, you know, there's no reason to even be involved, right? You can't repeat it. It's not a repeatable process. It's repeatable at each end of quarter, but in terms of uh, tradability and repeatability in terms of a particular strategy, no. And if somebody has one, great. But so just kind of and today with all these algorithms the way they run, there's no liquidity. They just move things around, to put prices on them, and then they just pair them up. So not something that I want to truly get involved in. Okay, so today is cycle day 3. Let's just kind of quickly go over what's going on here. So cycle day 3. And of course, market's been in this range. Of course, we're heading into the holiday shortened week this week. Again, I'm not expecting any real fireworks one way or the other, at least in the markets. Right. So market's just trying to extend a little bit. We could probably easily rotate back down into the high areas. Keep one thing in mind. So we're talking about like the value zone and what the implications of the various value zones and what they represent and so forth, acceptance, rejection. Okay. So one of the things that you want to, again, this is just a general profile concept, but what you're looking for is, of course, like in this case today coming in, prices closed right, near the highs of yesterday. So the expectation there is follow through, right? A little bit of it. It doesn't necessarily happen, but we're looking for follow through. So today is a cycle day 3. Price now is did pop above the cycle day 2 high. So this is a scenario we've seen. Don't know whether or not it's going to play out. Similarly, we've seen the past couple times this has occurred, but it's good to review. So on a cycle day 3 today, when price exceeds the cycle day 2, has that done that? Yes. All right. Price actually has traded up to the D level zone and that penetrations level up there. So right now between like 15s, 20s, 1750 on the high right now. So within, kind of that zonal area, all right, of D level and cycle day 3 penetration, right? So at least initial upside objectives, extension objectives have been fulfilled. Everybody agree? Raise your hands. Thank you. All right. Now, what else has happened? Right? Markets have now, prices now come back below the prior high. So this sets up a potential classic, right? PKB, peekaboo or look above and fail type scenario. Okay. What we have seen in the past, if you were to go back on a cycle day 3, when this kind of structure has unfolded, right? Not to say it'll happen this way today, but this is what has happened in the past, right? The market then, the critical area now becomes the close in this case to the overnight low. All right. So a couple of scenarios, right? We could pull back into this area and find support, and the market holds, right? And then perhaps works its way back above yesterday's high. One of that scenarios there, right? Just kind of laying out some scenarios. Another scenario would be, of course, to trade down and then violate the overnight low, maybe try to make an attempt and then rotate and go back into 5-day value. Right, so obviously a scenario. So remember on a cycle day 3, when targets have been fulfilled and prices now have exceeded that cycle day 2 high, all right, you can see here the 3-day cycle target at 88 has been fulfilled. So objectives has been fulfilled for the cycle. So now I kind of like to use the phrase, free to move about the cabin, right? So the market, or we call it a wild card day, all right? We use that term quite a bit, right, when it comes to scenarios like that. So we have a wild card day. It can do whatever it wants. It can always do whatever it wants. But in terms of the cycle, all right. So if the market, right, so big if, capital if the market were to start rotating lower, right, what's the next sequence in the cycle? The next sequence in the cycle is for a decline to unfold. Today, I don't know. We could continue pushing higher for that matter. But that would be a normal sequence, would be looking for the next rotational decline. So again, scenario. If that scenario unfolds, would we be surprised? Not at all. If that scenario does unfold, what would be some of the projections for a potential cycle day 1 target? All right. Well, you can go to your spreadsheets for those that have this subscription, and just take a look at what were the previous ranges for an average decline measured from the cycle day 3 high. So assuming we have the cycle day 3 high right now, the measured decline, we actually have some targets here already projected down into these areas here. Yeah, right, down here near the 18, 17s. Yeah, exactly, Steve, right? Somewhere in that vicinity, all right, all this area down here. Okay, absolutely, yes. Okay, so good job. So somewhere in there, potential anyways, right? So if we if we start seeing, this a decline unfold, of course we want to get aligned with it. That's our job, get aligned with it, right? But then you can say, well, what would be some potential targets? Well, we actually have not only those targets, but we have some big levels of some volume areas down here as well. So this becomes on a reversion type trade, right? So again, breaking the overnight low, close, and then getting some acceleration to the downside. This whole area here would be the target area. Okay, that's just one scenario. All right, the other scenario is we hold in this area, right? We work our way back above, okay, the prior high, and and we move higher. Another scenario would be just kind of chopping around. All right, kind of three different type of plays. So we'll see what happens. It is obviously end of quarter. Um, just be really extra cautious perhaps for any wild movements All right, and we always should be anyways, but just trying to kind of keep that in mind. All right. All right, sounds good. Let's see what we can conjure up today. All right. So VWAP right around the 71, 7501s rather, and it is a high volume node area. All right, so we'll see how the market wants to handle that. So again, stay flexible. And let's have a good start. Oh, and while most everybody's here, quick announcement. I will be simulcasting in the pit room and the PTG tomorrow. So Wednesdays are back on the schedule, but it will be myself simulcasting, so we won't have the issues. Hopefully, we won't have any issues of two people talking. So you're welcome to listen in on that or stay in our room here. It's going to be the same. Okay, so this will be just on Wednesday mornings. It will be the same format, so nothing changes for you folks. All right. In terms of looking for places for trades, you can eyeball the 18s up there where the A10 is. That is an open A10. All right, so kind of openings, kind of neutral opening at this stage, right around VWAP. And that is basically at 7,500. Yep, we got jolts at 10 a.m. Don't know exactly, Nicholas, on that. Not quite sure. Anybody have any suggestions? Data stream was working last night. Again, Nicholas, not really sure on about the data stuff. Um, I would first thing I always do is kind of close and restart everything. See if it's delayed data. I don't know if it's delayed data. Not sure how you have it configured. NQ's flying. Yeah, kind of a rule of thumb on the if you want to compare, for every point on ES, it's 5 points on the NQ, roughly. So if you're looking for 3 points, it's 15 points. All right, so basically 5 to 1. That's usually rule of thumb. That's usually what I use. Works pretty good. So NQ is always going to look like it's moving faster or farther. All right. So what we can use as our sandbox is, anybody? What would we use as a sandbox this morning early, first 15 minutes? Okay, so VWAP is a reference, yep. But what would be sandbox? So what's a sandbox then? What would be the sandbox? All right. Yeah. So essentially, we're a couple things you can use, right? You can use, the 92s in here, or you can use the lower value area, right? You can use the upper value area, right? Remember, we were referring to these as kind of premium discount yesterday as an alternative term, right? That's why I have the color of the value zone kind of that orangey, kind of a sandy color. That was kind of my intent. So to create it as that can always be used as a default sandbox, right? So you're all correct. You are correct, sir. So again, it's the idea is just kind of framing it out. That's all. All right. So if the price gets down to the value low area here, right? So we would kind of think of this as a discount, right? And if it get below there a little bit, right? Deep discount. Kind of we went over this yesterday, right? So we got to dip down here. We look for a move back up, kind of move up, kind of look for a move back down. But also another thing that you want to pay attention to when you're using kind of the value zone like this, right? And it looks like we're kind of in somewhat of a rangy pattern at the moment. But if the market wants to really break out, all right, what we typically will see, you see how the volume over here is tapered above the value high right over here in this area. Okay, you see how the volume is pretty tapered there, right? It kind of flattens out. That's normal. If we do get a breakout, right? Remember, a breakout we want to see with increasing volume. Buyers really, being aggressive, right? That's the idea of a breakout. If that happens, typically what you'll see is you'll start seeing the volume here, right? Because it has to eat through supply. Sometimes there's decent supply above the value areas. Sometimes there's really not, right? It all depends. But what we want to do is we want to see if on a breakout attempt, a move up and a pullback and then be able to move higher, clearing out any volume above the value. So that's typically kind of what we want to see. We want to see whatever volume is above the value zone, right, get cleaned out. If price tries to move up there, it kind of and then stalls out and reverses, then people are trapped. It's a false breakout. So you don't know it until somewhat after, right? But that's what we want to be looking for. Remember, we talked about what do I want to be able to see, all right? It's not enough to just have price move higher. We need to have volume associated with price. If price moves higher on a little volume, there's always going to be some volume. But on relatively small volume, that is a footprint of a potential failed breakout. But when we get a real good breakout that has some energy behind it, then that potentially can be sustainable. So these are just kind of doesn't have to, but those are the things that we want to be looking for, right, to help make a decision of whether or not a move is sustainable. All right, very good. So right now we are holding above mid zone there, VWAP. So buyers are still chipping away. Good sign for the bulls. Right, but as you can see, right, remember what I'm saying is I'm not predicting that any of this is going to happen. Just what are we looking for, right? And you can see right now we don't have much of that happening, even though it traded up there and it kind of just stalls out. Doesn't mean it's going to reverse, whatever. It's just not, if it's going to go, it's just not ready to go. So again, they still have to eat, the buyers still have to eat through whatever supply is there. But right now, they're still chipping away at it. Now, something like this would be a good time. You can look at some of the order flow that's happening. Okay, over here on the left, if you again just kind of getting an idea of what type of trades are near those highs. Not doesn't look like there's a lot of strength on the buyers. Small ball, call it small ball trades right over here on the left, right? This area up here, kind of all small. So not really strong yet. The buyer is still kind of chipping away. You can still see it right in this area. Buyers are still chipping away, right? But they're not really aggressively exploding up through that level yet. But they are continuing to nibble, you know, right? We're not seeing reversals here, right? We're still seeing persistent buying unfolding. So, and that's kind of what I look at. Like, what's the persistence, right? So if the market's trying to move higher, right? I always kind of refer to it as the onus, right, is on the aggressor, and the aggressor here are the buyers, right? They're the ones, right, chipping away or nibbling away, like a Pac-Man, you know, right? So the onus is on them, or the, you know, right, responsibility is on them to keep buying whatever supply is there. We're on a bull stacker signal. The bull stacker occurred over here where the color of the background changed. Right, yeah, so we're still on a bull stacker. So this is a stacker. I just don't have the labeling on here. Yes. Remember, the stackers just offer us a condition, okay, the condition of the EMAs, right? So I don't have the EMA showing on here, right? But that blue background tells us that the EMAs are in a positive stacked condition, right? 13 above 34, above 89. If you prefer to have EMAs on there to help you visualize, put those EMAs on there. I currently don't have them on. What I try to do here is I'm trying to offer kind of different configuration displays. Some are real, like this is a super clean display, but you still have information that you can glean from it. The color background, that's the stacker background colors, right? I can make them color bars, or background. I choose background. I don't have any color bars on the bars. The bars are neutral color. They're picking up somewhat of the shading of the background, but the bars technically are neutral colors. So you can see the volume. Again, we were talking about this right in here. So you can see now the volume here is changed, right? The volume profile. So there are some sellers there. Buyers are engaging them, and that's where we've been sitting. The volume has been building. When I'm looking at volume, I don't need to see big contract size, right? On the footprint, on the order flow. I'm not looking for like size, contract size, because that's the way the market is not offering us big contracts sizes like they used to. Before you used to see 1,000 share prints, 500 share prints, 2,000 share prints. We don't see that today. You know, it's mostly onesies, twosies, tens, and whatnot. All right. But what they can't hide, all right? There you go. There's a move. There's a breakout. Let's see what happens here. We'll quick push up. You see what I'm talking about in terms of like the buyers are persistent, okay, and somebody just slammed it to the upside, right? But see how that persistence in buying, that's the kind of stuff that we look for. All right, so they cleaned out those sellers. Now let's see if they can sustain the bid, or they just push it up and then they come back. Right? So they clean them out. Let's see if they can sustain them now. So at least did I describe that for everybody? in terms of the read of what, all right, looking at that, does that make sense to everybody? All right, so you get that volume type of thing, right? Now we'll see if this is sustainable up here or they drop it back down. So should they drop it back down, buyers should reemerge back in that area. But right now they're trying to sustain that bid. So the key takeaway here is the persistence of the buying. And I refer to that as, Pac-Man, right? Pac-Man buying. All right, so that said, we're just going to be persistent to the long side. So that's what the bulls want to do. Stay along with it. All right, so that was the scenario that we outlined earlier, was to hold, just as a quick review there, all right, hold that close area, which it did, and then work its way back above the prior high, which it has. All right, so that's the idea. And then so by laying out the scenarios like we did, right, we have those in mind, and then we start looking, okay, I got those in mind, and what's happening in real time. All right, so now we go into the real time, and that's what it's about, right? All right, so staying to the long side here, as you can tell, right, since we outlined that. Again, you had a long discount here to grab a hold of. Yep, great discount, first pullback. Remember, we got a breakout unfolding. All right, we described how the breakout would look. All right, we described how the breakout would look. All right, actually, what you may want to do, okay, is refer to this, right? Refer to this structure here, the anatomy of a breakout. All right, here's your homework. Come on. All right, there's your homework assignment. Okay. Describe the stages of a breakout. I've taken a screenshot of today's breakout. I've put in a little box there where your assignment is describe the stages of the breakout. Stage 1, stage 2, stage 3, etc., etc., etc. Whatever, how many, whatever stages, how you want to describe it. There's no limit. What do you look for? What are you expecting to see? So forth and so on. If you choose to accept the assignment. My keyboard is going crazy. I didn't. I misspelled breakout there on the chart. Doesn't matter. All right, you get the idea. I got a lousy keyboard here. All right, so describe the anatomy of a breakout. You don't have to submit it to me. You can do it on your own. I think it'll be very helpful for you. Today is a very good example. All right, for those working on the opening range, all right, just bring that in the mix here. All right, again, the ES and then both NQ and ES were long on here. NQ hit its target, uh, and NQ hit two of its. I'm sorry, NQ hit one target. ES hit two of its targets, and we got a stop trail in at break even now. Crude oil did get stopped out on the opening range strategy there. All right, so that's the opening range strategy. Just bring that into view for those playing that game. All right, beautiful, 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 beautiful. Doo-doo-doo-doo-doo. All right, so just staying in alignment. You had a nice discount extreme there. And if you're not sure what the discount extremes are, everyone, okay, uh, again, make sure you go in the members area under member video tips. Okay, so let me just show you everybody on screen here. All right, so you want to go into the members area. You want to go into video tips. Okay, and in this particular case, we're looking at discount extreme. Click on discount extreme. Oh, gonna get this stupid thing. Right, so it's going to give us, right, the extreme discount video short, 2 minutes 43 seconds. I think it's worth your time. Walk through that, see what the extreme discount's all about. You got to log into the members area. When was the last time you logged into the members area? All right, and you will learn about discount extreme that's showing up on the screen there. All right, so members area and video tips. We have a video for that. All right, back with you. All right, so in good shape. Hope everybody did well on that, at least understood the unfolding of that. All right, there's the login to the member video tips, or that's the link rather. Login is required. Wow, this keyboard blows. I gotta put my other one back. Shoot. I have the wire. Wow, that sucks. Yeah, I gotta go. Use this one again. Deal with that. Oh, here we go. right. All right, so just stay into long side. Actually, put my old keyboard back. I had one sticky key, but the new keyboard that I got just absolutely sucks. This is much better. Yeah. When you don't have good equipment, all right, so just stay into the long side, everyone, right? I am not playing the money box zones right now. Right, I think the momentum is pretty good still. Right, just kind of still leaning to that side. You're certainly welcome to play those money box zones, right? How you wish. I'm currently still playing the long side here. All right. So what else? Just hanging out here for the moment. So what do we got up to the 42s? All right. Again, if you decided to take that MB1, all right, you have been triggered on that. Price did get to the cycle day 3 second penetration level at the 40s. So very good. This is a strong cycle. And of course, being that it's quarter ending, we got some window dressing day. All right, next area, if you're interested in a trade here, is around the 26s, right, for the A10. All right, so the A10 did trigger here. Let's see if this one works. See if there's any punch left in it, or are we going to get punched out? That's on the A10. All right, still at 88.10. Seems as though the buyer is kind of slowing up. If you are in on the M1, right, the money box one, again, you get the D level as a target at the 1950s or so, 20s. All right, that didn't work. Again, the 810, just not enough of oomph on that, so we got punched in the face on that one. That didn't work. Yeah, the buyer's just kind of lost its steam. So again, if you're in on the money box one level, you're covered into that 19.5, 20. Okay. Only a couple clean setups today. The A10 just not responding, that's for sure. We got the discount earlier that responded well, and that's really about it. Not really the cleanest of days. Again, the MB1, if you again took that on the D level money box, that got you back to the first target at the D level, right, which was around the 20s. And again, that low volume node here, finding a buy response. So that's another thing in terms of profiles, right? Pay attention to. Again, we talk about high volume nodes, but remember those low volume nodes, right? These are rejection areas. So in other words, price comes down there, we're looking for buyers to step in that low volume node area. All right, so pay attention to the profiles there. Again, low volume nodes like this. Okay, that's called an LVN, low volume node. Again, that's usually where you'll find some potential responses as well. Okay, so on the way down here, you're kind of eyeballing, where that volume node is, if you can identify it. No, it's not the same. A high volume node is just the opposite. Okay, now the high volume node tends to be a magnet. Okay, and then the low volume node tends to be the polar opposite of a magnet. Do you ever take two magnets and push them together, right? And the polarities, Yeah, and you just, no matter what you do, you're never going to connect those together. So kind of look at the low volume nodes similarly like that, right? It's a rejection. It's looked for potentially as a rejection level. So with the rejection meaning here, sellers pushed it down and then buyers stepped in at that level. So absorbed the sellers, right, and pushed it back up. So that's what I mean in terms of rejection, right? Rejecting from going it down any further. Whereas the high volume node, right, it's the opposite when it comes to the polarity. It tends to be a magnet, tends to be kind of wants to go in that high volume area. Not just the high volume node. Remember, think about everything as a zone, right? So like this, the low volume node, right, is really kind of a zone in here. And they tend to be a lot smaller. So they tend to get a sharper reaction from them. So that's why I have profile up here. I mean, I don't talk a lot about profile except for, kind of the explanations about this, right? So there's a high volume edge up here. So if price pulls up here, I'd be looking for some sort of a potential rejection, above this area back into the highest area. Remember, just think about the big institutional players, right? They need liquidity. Just think of it this way. They need liquidity to get business done. The buy business side, the sell business side, okay? They need liquidity. They need to pair up with each other. I want to buy them here. I want to sell them there. Okay, this is where we can do the most business collectively. So it's usually within the highest volume areas, right? When the market moves down to a low volume area, it's because the market didn't care about that level. There's always going to be some trade there, even if it passes through. There's some trade, but the market doesn't care for that level because it doesn't spend any time there, nor does it spend any volume there. Does that make sense? Just think about profiles that way, all right? The market, the big institutional players, they want to do, they need to do business in the high where there's liquidity. I'm not talking about liquidity grabs, all right? That's just a function of the market that they love to take stops out. But even when they take stops out, they're not getting a lot of liquidity in those stops versus high volume nodes. High volume node areas is where the market can establish itself in a zone and go buy and sell, buy and sell, buy and sell. Both sides. So when you look at these low volume areas, I'm always looking for the low volume areas, right? I mean, that that will probably give you a greater, I mean, you can do all your Fibonacci retracements and all the other stuff that we do. But again, when you take a look at that low volume area there, that tends to be, in this case, that tends to be a buy zone, right? On the way down, then you're looking for that bounce up, right? Now, when you start pairing that off with CCI or bid-ask volume ratio, you can see here there was some positive divergence into that low. Okay, so again, the idea here is to be looking ahead, not with what is happening, but okay, potentially where could it stop, reverse. One of the tools you want to use, right, is the volume node, is the volume profile. That will give you a clear or a clearer zone to consider. Amazing. It's fucking amazing. All right, guys, I'm going to take a short break. We hit our 2-hour limit here on our recording this morning. Again, Bull's still alive on this, and we'll keep it. We'll keep kind of just staying in alignment with them on the swing here. All right, getting up near the highs. Uh, should the market kind of turn tail, it would need to break back down through the 15s area. All right, but for now, again, very much alive on pullbacks, and we'll kind of continue to maintain in that posture until there's some sort of a shift back to the downside. So again, looks like the buyers still want to dress up the day, as they say, right? Quarter end window dressing, but the majority of the rebalance is fully complete. So not really getting these shallow pullbacks, not really getting much more out of it before the buyers step right back in. So keep focused on that side of the trade for the time being, and we'll end the stream here. Get the recording up and rendered, and it'll be posted a little bit later on. So have a good rest of your day, and we'll reconvene for tomorrow, start of the new month.